Hi, my name is Marcus. Welcome to this video, which provides an introduction to futures trading for absolute beginners. The target audience for this video are people who have never done any trading before. That means we will not talk about any charts or advanced trading strategies. Instead, I want to give an authentic and easy to understand introduction into the world of trading for all of you who are generally interested in this topic but don't know yet what trading actually is, how it works, or if it could be for you. Before we get into the details, I want to briefly introduce myself so that you guys know who is talking to you. My name is Marcus. I work as a professor of computer science at a university for distance learning. I started my own trading career a while ago, actually, a couple of years ago in 2021. And I want to point out that I started with absolutely no trading knowledge at all. I had no prior experiences with, let's say, stocks or any other investments, so I really started at the very beginning. Therefore, I know the struggles of a beginning trader perfectly well firsthand. And I still remember all the questions that I had myself when I first started. I'm pretty sure that other beginners may have the same questions. So hopefully I'll be able to answer some of these questions in this video to make the start of your trading journey a little bit easier for you. And just in case you're wondering why exactly I'm doing this, obviously I enjoy teaching very much. Otherwise, I wouldn't be a professor, right? So this short video lecture gives me the opportunity to combine my passion for teaching with my other big passion, which is trading. And I already mentioned this in the beginning. This video is for absolute beginners without any prior trading knowledge. So if you're curious about futures trading, if you want to learn the fundamental basics, or if you just want to see if trading could be the right career choice for you, this video is probably exactly what you need to watch. Here you see the agenda of this short video lecture. I will start with a brief explanation of what trading actually is. I will also explain the differences between trading and investing, which is important to understand if you consider starting trading, especially for those of you who have never done anything in the financial markets before. Next, I want to discuss one of the most important misconceptions about trading that many people have. Many people think that trading is just gambling, which is obviously not true. I remember how often I had this discussion with my parents-in-law when I started trading, and it was very difficult to convince them that trading is not like gambling in a casino at all. So I have prepared some slides for you, also with some scientific evidence that will hopefully convince you as well. Then, as I mentioned earlier, we are specifically looking at futures trading. It is very different from trading conventional stocks, for example, and therefore it's important to talk about the fundamental idea of futures. I'll talk a little bit about what they are and where they come from. And additionally, I'll explain in detail how futures trading actually works. I think this is especially important to actually understand how this works if you consider becoming a futures trader. I prepared a nice little example for you to illustrate this in detail. Afterwards, I will briefly motivate why trading can be an amazing career. Surely, it's not for everyone, but I personally fell in love with trading a long time ago, and honestly, I cannot imagine doing anything else as a career anymore. So, I want to show you what makes trading so great and why it has become my personal passion. At the end, I have prepared a short FAQ with frequently asked questions for you. I very well remember all those questions that I had in the beginning when I started trading. And over the time, I also collected questions from other beginning traders that I heard over and over again. My goal is to honestly answer these questions from my own perspective and my personal experience as good as I can. I'm sure this little collection of knowledge will be very useful for you. So now you know exactly what to expect of this short lecture. Let's get to it and start talking about what trading actually is and how it is different from conventional investing. So, what is trading? Trading means using short-term price movements in financial markets to generate profits. Your goal as a trader is to repeatedly profit from small moves in the market. And don't be confused here, small is very relative, of course, because small move can very well mean a couple of $1,000 depending on how and what you trade. It's important to understand the differences between conventional investments and trading though. As a typical investment, it has a long time horizon, usually months or years. That means you buy something, for example, some stocks of Nvidia, Apple, Microsoft, whatever, and then you hold it for a pretty long time. In the end, your goal as an investor is to sell it with some profit after the prices went up, right? So typically you first buy something, then you hold it for a while, and then you sell it again. Your risk here is very limited and plannable. Obviously, the worst thing that can happen is that you buy some stocks and they lose value, right? So worst thing is that the price drops to zero and your stocks become basically completely worthless. Sure, this is a risk, definitely, but it is plannable and very limited. You can never lose more than you initially invested. So if you bought, for example, some stocks, let's say at $100, and their value drops to zero, the worst thing that can happen is that you lost your $100, but not more. Investments are definitely a very cool thing, but they are different from trading and therefore not the focus of this video. So let's talk about our daily business. Let's talk about trading. First of all, you have to understand that trading has a completely different time horizon than investing. Trading is much more short term. There are different types of traders out there, and your personality and personal preferences dictate which type of trader you are or which type of trader you will become. Some traders prefer to hold their trades longer, usually for days or sometimes even weeks. We call this swing trading. However, especially when trading futures, which is what we are doing, you need a lot of money to do swing trading efficiently. Therefore, it's rather the big institutions like hedge funds and asset managers who trade on these time frames or on even higher time frames like month. Then we have traders who prefer to hold their trades for a shorter period, let's say minutes to hours. We call this intraday trading. Intraday trading, or just in short term, day trading, is by far the most common form of trading for private traders. And it's exactly what I am doing. I personally usually hold my trades for about 20 to 30 minutes. And finally, we have scalpers. Scalpers only hold their trades for a couple of minutes or sometimes even only for a couple of seconds. Problem here is that this space is highly dominated by machines and algorithms. Therefore, scalping, in my opinion, does not reasonably work for us at all, because you can probably imagine how well it works when we try to compete with a highly specialized computer. Therefore, usually intraday trading is the way to go when you want to trade futures. In terms of actions, you notice a big difference here in comparison to investing. Rather than limiting to buying something, we can also sell. And this is very interesting actually, because this concept is called short selling, and it means that we can sell something that we actually don't own. Now you probably ask, how is this even possible? Well, we can simply borrow an asset on the marketplace from somebody else who has it, and then we immediately sell this borrowed asset. Our goal is to buy it back later at a lower price to then give it back to the original owner. This is an amazing concept because it gives you great flexibility and it allows you to earn money even when prices are falling. When we buy something, we say we go long or we open a long position. On the other hand, when we sell something, we say we go short or we open a short position. I'll illustrate that later in more detail when I show you the example I prepared for you. In terms of risk, trading is much riskier than investing. Because in contrast to investing, at least in theory, your risk is unlimited here. That means you could theoretically lose everything in your account and even more if you're not careful. The good news is, however, that this doesn't happen easily. It requires excessive ignorance of a trader, and on top of that, most brokers even have some mechanisms in place that prevent such scenarios to occur in the first place. So it's actually not a big problem in practice, and of course, it's important to be aware of it, but not really more. Next, I want to talk about a very important topic. It's a misconception that most people have about trading. Many people think that trading is like gambling, and there are even popular scientific papers out there that claim that price changes in financial markets are random and can therefore not be predicted. They say that past price movements cannot be used to predict future movements. Of course, this is a big problem, right? If we cannot predict future price movements and if everything is indeed completely random in the financial markets, we cannot really earn money with trading. Luckily for us as traders, this hypothesis is very controversial. In fact, there are popular researchers out there that claim the exact opposite. And if you think about it for a second, markets are based on human behavior, or to be more specific, on supply and demand. And human behavior, especially mass behavior, is obviously never random. And furthermore, there are even professional traders out there who have already proven that it's possible to successfully teach trading. Those guys, named Richard Dennis and William Eckert, they trained a group of people who had no prior experience in trading. They taught them a pretty straightforward mechanical trend following system. And by applying this exact system that they learned, the students were able to earn over $100 million over the years. That's crazy, right? But at least it proves two important points for us. It proves that trading can be taught and that it's possible to predict future price movements because, think about it, otherwise it would obviously not be possible to successfully and consistently make money by applying a mechanical trading system that relies on past price movements. So I would say that definitely is good news for us traders, yeah, because otherwise trading wouldn't make much sense and we would not be able to earn money with it, right? And maybe you have ever asked yourself the question, why do casinos make so much money? And how are they able to do this consistently, although the results of the games that they offer seem to be completely random? The answer is they have an edge. This edge ensures long-term profits for the casino, despite the fact that you occasionally have players who win or even hit the jackpot. An edge is a statistically measurable and repeatable advantage baked into clear rules. Like what I told you about on a previous slide when the two professional traders, Richard Dennis and William Eckert, trained unexperienced students to become successful traders. They gave them an edge. And you find such an edge in all games that are offered in a casino. No matter if we're talking about roulette, blackjack, slot machines, they are all designed to favor the house. Let's look, for example, at roulette. When the ball lands in a pocket with a zero, all bets, for example, on red or black or on odd or even, are lost. And this creates a statistical advantage for the casino. So even if some players win and even if the casino loses some rounds, the casino will still always win in the long run if enough games are played. And that's what it's all about. Therefore, for us traders, there is an important takeaway here. As traders, we also need an edge. This means we need a statistically proven strategy with clear and repeatable rules. And if we have something like that, we can be profitable in the long run, just like the casino. So, as I already mentioned, we are trading futures. Let's talk a little bit about what futures actually are. A future is a contract between two parties. It's basically an agreement between a buyer and a seller to buy or sell something at a later point in time at a price that is agreed upon today. And that something can be oil, wheat, gold, stock indexes, and many, many more. And it's not a new concept, actually. Farmers and merchants have used contracts for centuries to lock in prices. For example, in Japan, early versions of such future contracts were used on the Osaka rice market, so that buyers and sellers of rice could plan ahead. And in more modern times, especially in the US, farmers used them to lock in crop prices and millers or bakeries locked in their costs. By doing so, both parties were able to turn uncertainty into predictable planning. Because the farmer, who is the seller in this case, knows exactly what he will get in, let's say, 3 or 6 months when the contract is due. And the buyer, on the other hand, so for example, the miller, knows exactly what he has to pay to the farmer in 3 or 6 months' time to get this product. So futures definitely are a very cool thing. But of course, we are not interested in buying wheat or oil or something like that, right? We as traders, we just use futures to bet on price movements without ever wanting to own the underlying asset. And in fact, nowadays, most traders, especially private traders like us, they close the trade before the due date of the corresponding contract. So that means they don't actually want to receive the underlying, for example, oil or wheat. They just want to speculate to make some money in the markets. So, now that you know what futures are and where they come from, let's talk about in more detail how futures trading actually works. It's very important to understand that every trade always needs two sides, a buyer and a seller. It's just like on any other marketplace, like for example on eBay or Amazon. You cannot sell something if nobody wants to buy it from you, and you cannot buy something if nobody wants to sell it to you. Prices on all financial markets move because of supply and demand. If there are more buyers than sellers, so if there is more demand than supply, the prices go up. If, on the other hand, there are more sellers than buyers, so if there is more supply than demand, prices go down. Again, it's exactly like on any other marketplace, like for example eBay or Amazon. If there is a lot of competition and if many people offer the same product, so that there is much more supply than demand, the price is usually lower. And if, on the other hand, you have a lot of demand, so a lot of potential buyers, but not so much supply, so only a handful of sellers, the price is most likely higher. The same is true for the futures market. Everything is driven by supply and demand. If many people are actively buying, the price will go up. If many people, on the other hand, are actively selling, the price most likely goes down. It is also important to understand that trading is a zero-sum game. That means that for every winner, there is always a loser. So if you made some profit, somebody else out there lost some money, and vice versa. Let me give you a little example to illustrate what I mean with this. So let's assume we have two futures traders. We have Bob and we have Steve. And the current price of whatever we are trading is right now 10 US dollar. In the futures market, we are trading so-called lots. A lot is a standardized trade size for a given instrument. The exact value and quantity of a lot is set by the exchange or broker and varies from asset to asset. So that means one lot of, let's say, crude oil is different in terms of quantity and value from, let's say, one lot for gold or one lot for wheat or soybeans. But right now, for our simple example, it doesn't matter which market we are trading. So we just say we want to trade one lot of something, and this one lot right now costs 10 US dollar. This is the current price. Bob analyzed the market, and Bob thinks, hey, I think the price will probably go up. So I want to buy. I want to buy now. I want to buy one lot for the current price of 10 US dollar. Steve, he also analyzed the market, but he has a different opinion. He thinks the prices will fall. So he thinks market will go down. Therefore, he wants to sell. This is a good thing because now we have a buyer and we have a seller. And this means, you remember the previous slide, that now a trade can happen. But the problem, of course, is that Bob and Steve, they don't know each other, right? So they cannot directly trade with each other. Therefore, we need a broker. The job of the broker is to connect potential buyers and sellers so that trades can happen because everything happens anonymously. So Bob doesn't know Steve, Steve doesn't know Bob. So, and how it works is that Bob places a buy order with his broker. He says to the broker, I want to buy one lot right now for 10 US dollar. Steve, on the other hand, says, I want to sell one lot for 10 US dollars. So he places a sell order with his broker. The broker receives both orders and then he brings both parties together. Which means Bob is now long one lot for the price of 10 US dollar and Steve is now short one lot for the price of 10 US dollars. So both are now actively in the market. Both now have an open position, an open trade. Now we assume that prices rise from 10 to 15 US dollar. Bob, he is happy because obviously his analysis was correct. He wants to realize his profit, so that means he wants to sell his long position. Right? Remember, he initially bought, so therefore now he has to do the opposite, so he has to sell in order to close his trade, in order to get out of his position. But Steve, he doesn't really want to close his position yet. Obviously, he sees that the market is turning against him, but he assumes that the price will still fall again. If he would close the trade now, he would make some loss, and so he decides to stay in the trade. But luckily, there are many more participants than only two in the marketplace. So we have another market participant, let's say Alice, and Alice thinks that the price will rise further. So she is happy to buy at a current price of 15 US dollar. So what happens? Again, we have a buyer and a seller. They place their orders with their broker. The broker brings them together and the trade can happen. Bob, who initially bought at 10 US dollar, now sells at 15 US dollar, obviously made a profit of 5 US dollar. He closed his trade. That means he is no longer an active market participant now. Alice, on the other hand, now opens a trade. She is now actively in the market. She went long. She opened a long position at a price of 15 US dollar. Now, let's assume that the price rises even more. The price rises from 15 to 20 US dollar. Bob has no open position anymore, so he already realized his profit. That means he's only sitting at the sidelines, he's only watching the market, but he is not able to do anything right now. Alice is happy with her profit and she decides to take that profit, so that means she wants to close her trade. Again, because she is long, she has to do the opposite to close her trade. That means to close the long position, she has to sell. And then Steve, who sees that the market is now really turning against him, he obviously wants to limit his losses because you never know how far the market goes. So he decides to finally close his trade as well. And because he was initially short, he now has to buy back his short position. That means, again, we have a buyer and we have a seller who can potentially trade with each other. Alice, who initially bought at 15 US dollar, can now sell at 20 US dollar to close her long position, and that means she makes a profit of 5 US dollar. Therefore, she is out of the market. She has no open position anymore. Steve also closes his trade. He initially sold at 10 US dollar, right? We remember he went short at 10 US dollar. Now the market is at 20. In order to close his short position, he has to buy back. So that means he now has to buy at 20 US dollar to give the borrowed asset back. So that means he has a loss of 10 US dollar, right? Because now he spends more money on buying the asset back than he initially earned by selling the borrowed item. So he makes a loss of 10 US dollar, and afterwards he's also out of the market. He also closed his trade, his open position. So now all three traders have closed their positions, and in summary, Bob made a profit of 5 US dollar, Alice earned as well 5 US dollar, and Steve, he lost 10 US dollar. And so you see that trading is a zero-sum game because no money was magically generated here, right? It's rather a redistribution of money. Yeah, Steve lost 10 US dollar and 5 of these 10 US dollar went to Bob. Another 5 of these 10 US dollars went to Alice. And in total, it's 5 plus 5 minus 10. It's 0. So a zero-sum game. And the clearinghouse is the institution that makes sure that all trades are settled correctly. So everyone gets paid in the end, or in Steve's case, has to pay. And all the institutions that are involved here, like brokers, exchanges, the clearinghouses, they all earn their money from transaction fees. Because when you do a trade, so when you open a long or short position, whatever you do, if you buy or sell, you have to pay a little fee. This little fee is also called a commission or a commission fee, and this went directly to brokers, exchanges, clearinghouses, and this is how they earn their money. So now that you know how futures trading works in more detail, let's talk about the advantages of trading and why trading can actually be a pretty amazing career choice. So first of all, trading offers you a lot of freedom. You can set your own working hours. It can be part-time, it can be full-time. So you alone decide how much or how little time you want to spend with trading. And of course, you can also freely choose the location in which you want to trade. You can basically trade from all over the world. In theory, as long as you have stable internet connection and a good computer, you could also trade at the pool or at the beach. Although I would not necessarily recommend it, at least in theory, you could do that. And then the ultimate goal of most traders obviously is financial freedom at one point. And then trading also brings independence and autonomy. So you don't have a boss who tells you what to do. You don't have to be afraid of any layoffs. You don't have to take care of any clients or customers, right? You are basically responsible for your own success. You decide what you want to do, how you want to trade, which markets do you want to trade. So there is nobody telling you anything. And this is amazing, you are getting paid for your performance. The results are 100% your own responsibility, right? So in trading, only the outcome matters, not the working time. It's not your typical 9 to 5 job where you are getting paid by the hour. You are getting paid to make good decisions. You are getting paid to make the right decisions, not just sitting around and wasting your time. But of course, we need to do a little reality check here. So sustainable success in trading requires certain things. It requires a proven edge. It requires clear rules and strict risk management, and of course the discipline to follow your rules and to adhere to this risk management. If you can do that, you can be very successful, and then trading can be an amazing career choice and can offer you so much more than a typical 9 to 5 job ever could. Okay, so finally, before we come to the end, here is the promised FAQ where I want to answer some typical question that I heard over and over being asked by beginning traders. The first one is a very typical question, and it's not only asked by beginning traders, it's basically asked by everybody that I meet. This is a typical misconception about trading. Does trading really work, or is it just gambling? Because most people assume it is just gambling, but hopefully I showed you that this is not the case, right? Without an edge, without clear rules, yes, trading is just gambling, but if you have a tested statistical edge, like the casino, if you have clear rules and if you have the discipline to follow your rules all the time, trading can definitely work. Can anyone learn to trade? Absolutely, yes. So, as it has been proven by the turtle traders, by the two guys that I mentioned earlier that made this experiment, they showed in their experiments they can successfully teach trading. And so I would say, yeah, anyone can learn to trade, but it requires a lot of practice, a lot of discipline, and consistent effort. So it's absolutely doable, but of course, it's not trivial. It's not something that you simply achieve overnight. Can you learn to trade part-time alongside a job? Absolutely, yes. This is how I started. When I started with trading, I still had a very demanding full-time job. I worked up to 10 hours, sometimes even more every single day. I still had time for trading in the morning, in the evening, on the weekends to practice, to analyze charts. So if you want to do it, you can definitely do it. Although I have to say, if you're only working part-time, it's of course definitely easier. What do I need? So it's not much actually. So you need a trading platform, so a trading software, for example, ShareChart or TradingView. There are many potential softwares out there that you could use for trading. I personally use ShareChart. I think it's the best software out there for futures trading. Then you need a stable internet connection. This is very important because you don't want to lose your internet connection while you are in a trade. Then you need a broker, as I explained earlier in this little example. And you need your written edge, your written rules that you can follow. And this is often called a playbook, right? Like in sports, this is your book that contains the rules that you need to follow that give you your edge in trading. Okay, so the next question that is asked frequently by beginning traders is how much starting capital do I need? So how much money do I need so that I can start trading? The answer is it depends. So there are multiple options here actually, and I cannot explore them all in detail now in this short video. So I only want to briefly mention it. So option number one is you can trade your own money, which means you get an account with a broker, you deposit your money there, and then you start trading your own real life money. If you want to do that, a small 4-figure account is recommended. You don't need much more actually. So when you decide to trade futures, you can start with less money than, for example, you would need if you wanted to start trading stocks. On the other hand, you could trade prop. There are so-called prop trading firms out there that give you an account for a monthly fee. So this monthly fee is very small. It's typically 20, 30, maybe 40 US dollar. And for this monthly fee, they provide you with a trading account that you can trade basically on their behalf. And as soon as you made enough money on this account, you can request a payout, and this prop trading firm will then give you a part of the profit that you made on this account. So this is very affordable because it means you basically need no own money to start that. You only have to pay this very small monthly fee. This is how many new traders start their futures trading career. This is how I started as well, and this is actually how I am still trading until this very day, because it limits your risk very much, and it has a lot of benefits. However, one advice that I want to give you, please don't start trading with real money right away. I can guarantee you, you will only lose that money. It doesn't make any sense at all. Trust me on this. I've been there, I've done that, I made this mistake, so don't do that. Please always practice in the simulator. So almost all trading platforms like ZeroChart, they provide you with the possibilities to simulate your trades. They give you a demo account where you can just play with paper money, where you can just basically try your strategies, try your setups, and really see if you have a statistical edge, if your trading strategy works. And only then, only after you have proven to yourself that your strategy works and that you have this edge, please only then move from paper money into real money. Please don't do it before, otherwise you will definitely regret it. You will only use your money, I can guarantee you. Then next popular question is, can I trade at any time? Generally, I would say yes, but the best liquidity and the best volatility is seen between 9:30 and 1600 EST, which are the core trading hours of New York Stock Exchange, so the Wall Street. So what does it mean? Liquidity means how easy it is to buy or sell without moving the price much, and how easy it is to get fair prices. Because remember what I said, you always need a buyer and a seller for a trade, and demand and supply move the markets, move the price. So if you, for example, want to buy something, you need a seller, right? But out of these core trading hours, there are not so many other traders around. So maybe you will not get the price that you desire, right? So therefore, you always want to trade liquid markets. You always want to trade in times where it is high liquidity in the market. Volatility means how much and how fast the price moves up and down. Remember, I said earlier, we are profiting from small price movements, but in order to be able to profit, we need those movements, right? So when the market is not moving, we cannot profit. So therefore, we at least need a certain degree of volatility, a certain degree of movement in the market in order to make some profits. Then another typical question, how time intensive is trading? It's highly individual. It's really highly individual. It depends on your personal trading style. If you want to day trade, if you want to swing trade, I would say typically from most traders that I have known so far, 2 to maybe 3 hours a day is more than enough to make a very decent living with trading, right? And this again underlines the benefit of trading in comparison to, let's say, a typical 9 to 5 job where you are paid by the hour and for the time you spend there. Of course, now you can ask me, if trading is so great, why does not everyone trade? Yeah, easy answer. There is a very steep learning curve, so you need to invest a lot of time, a lot of effort here until you become a profitable trader. You have a constant psychological pressure because you are dealing with money. You're dealing with a lot of money actually, and you need to have the discipline to follow your rules at all time, right? And the problem is, this is not for everyone. To be absolutely honest, it's not for everyone. You have to find out, you have to see for yourself if this is the right choice, if this is the right career for you. But if you can handle those things, as I said earlier, trading has a lot of advantages and it can be an amazing career. Then another question that many people ask in the beginning, how long to become profitable? So how long does it take until until consistently earn money with my trading? This is highly individual. From my own experience, typically I would say it takes most traders 3 to 4 years of intensive study and practice until they become profitable, right? So that means literally thousands of hours of screen time until you reach that point of profitability. And yes, this is a lot. And this is the reason why so many traders fail. There are some statistics out there that will tell you that 90, maybe 95% of all traders fail at some point. And the reason is because they give up before they are profitable. It's a long time. It's a lot of effort that you have to invest into trading until you are profitable. But if you ask me, it's definitely worth it. It's definitely worth it. And then, of course, you can ask me, hey, there are so many gurus on social media, Instagram and Twitter or X or what they are all called. And they all promise you these quick profits. If you purchase their course, if you purchase their training, their trading strategies, they promise to make you rich within a matter of weeks or months. So how can this be? And why I'm telling you it takes 3 to 4 years and they tell you they can do it within weeks or months. So the answer is very simple. They are straight out lying to you. It's just marketing. I can promise you, I have never ever seen anybody who has become profitable within weeks or months. I guarantee you this is straight out impossible. It's just not possible. Serious trading takes time and it takes experience, and you only get experience with screen time. You have to be there, you have to watch the market every single day of the week, and you have to trade first on sim, get a lot of experience, and then over time, after a couple of years, you can then become profitable. But not within a couple of weeks or months. Definitely, trading is not a way to get rich overnight. This will not happen. I know nobody who was ever able to do that, right? So from my perspective, it's only marketing. So they are lying straight to your face. How much can you earn with trading? Yeah, it's a question. Many people wonder how much money can we make with trading? And the answer is it's highly individual. It's highly variable. It typically ranges between several hundred and several $1,000s per day. It really depends on your personality. It depends on your trading style. It depends on, are you an intraday trader? Are you a swing trader? Which instruments are you trading? How much time do you spend with the markets? How long have you been trading? How much capital do you have? So there are so many factors, and therefore the income is really variable. From my own experience, many beginning traders, once they reach the point of profitability, they typically start with several $100s every single day. So my personal goal, for example, my daily profit target is something between $300 and $500. This is my personal goal. But I know a lot of traders who earn much more, who earn $1,000, $2,000, even $5,000 every single day, right? Basically, there is no limit. There is no ceiling. You can earn as much with trading as you want, basically. But then you can ask the question, hey, why isn't every trader a millionaire then? The answer is psychology. Every person has an unconscious financial limit. Most of us, we are not aware of this limit until we reach it. But as soon as we reach this limit, we notice it immediately. Dealing with money becomes then extremely stressful, and beyond this limit, we start to make mistakes, we start to make poor trade choices, and our trade performance, it will suffer. And as soon as you notice that, you will then have reached your personal financial limit, and over time, maybe you can expand this limit a little bit, but most traders As soon as they are profitable, as soon as they decide to make it a career, they decide to stay within their comfort zone because they don't want to be stressed out every single day. Right? And this is the answer why not every trader is a millionaire. Most of them are actually, most successful traders at least. But yeah, everyone has this unconscious financial limit, and it is highly individual, it's different from person to person, and nobody can tell you in advance what your limit is until you personally have been there. But if you are there, you will notice it, definitely. So you have seen how futures trading works. Hopefully, this presentation gave you some good insights and answered some questions that you may have. As a beginning trader, it's always great if you have other traders that you can talk to, people that you can share ideas with, that you can share your trade ideas, your setups, that you can discuss certain things with. So learning to trade all on your own can be very daunting. It can be very difficult. So therefore, good news is we have a very friendly, very professional trading community. I've been with this community for a couple of years now, and there are a lot of friendly people. We have beginning traders, we have more experienced traders in there. And if you're looking for a nice place to trade with, to hang out, I would recommend join our trading community. So we welcome beginners and experienced traders alike. So beginners, they can learn to trade in our community. They can receive guidance and feedback from more experienced traders. And of course, more advanced experienced traders, they're welcome as well. They can discuss their trades, their ideas with other experienced traders. They can use the community to refine their strategies and their setups. So it's basically a place for everybody. And more information about our community, if you're interested, and I hope you are, you can find them below the video in the description and the comments. And yeah, this brings me to the end of this presentation. I want to thank you very much for your attention if you made it so far. Hopefully it was interesting for you. Hopefully it gave you some good knowledge that you can use on your own journey to become a successful trader. And yeah, again, thank you very much for watching this video. Thank you very much for your attention. And I sincerely hope to see you in our trading community. Take care. Bye-bye.